You ever want to know what a ladybird deed is? Do you know what the 3 questions you have to answer are in any income plan? What qualities do you look for in an advisor? How do you do tax bracket optimization? Folks, we're going to be talking about all these things today, so stay tuned.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Ladybird deeds, what are they? Now, I think the term comes from Lady Bird Johnson, is it, from what I understand. But what are they? Most of your investments, most of your, like your savings account, checking accounts, maybe your investment accounts, you have the ability to set beneficiary designations on those. When you die, they know where to go because you've listed a primary beneficiary. And then in case that primary beneficiary isn't around, you've listed contingent beneficiaries. So this goes in any good estate plan because what you want in a good estate plan is having all your assets knowing where to go. Now there's one asset you have though, for the most part, doesn't know where to go unless you put it in what's called a ladybird deed. That's your home, all right? If you were to leave this earth today, would your home know where to go? Most likely not. So it's going to have to go through probate, and then your will is going to have to determine who that home goes to. But here's what you get to do. If you put your house in what's called a ladybird deed, now it doesn't change your incident of ownership, it doesn't change your use of the property in any way. It just simply puts a beneficiary designation on the deed that says when you die, here's where it goes. Now and it completely avoids probate. Now it's a good planning tool when you're looking to, let's say, maybe avoid Medicaid or the state or federal government taking it. Think about it. If you have a house, they tell you they can't take your house to pay for your care if it's the government paying for your care, okay? But if they let you keep your house, but when you pass away, now they can come back after it, all right? Now the way most people used to try to protect it is they try to put it into a trust. But now they say for Medicaid planning, you can't even apply for Medicaid until that house is taken out of a trust. Why did they do that? They did that because they want to be able to attach it, so they don't want you to have it in a trust. But here's the beauty. If you put it in a ladybird deed, what happens is it never goes through probate. Remember that. So when you pass away, it goes to the beneficiary, avoids probate, state or federal government can't touch it. So it's a great, what we call elder law planning tool that you're going to see a lot of attorneys want to use. Now, you can also make the beneficiary of the ladybird deed the trust. So if you indeed, for one reason or another, wanted it to go to the trust, well then just list the trust as the beneficiary in that ladybird deed. Then when you pass away, avoids probate, goes into the trust, then gets distributed according to the trust and how you had it. So folks, this is a great estate planning tool. Listen, if you have a lot of assets and they all know where to go, for the exception of your house, and you want to avoid probate there too, then I suggest you learn more about a ladybird deed. Give us a call. We'd be glad to direct you in the right direction. You've never been to a seminar like this before. This event is all about you, the challenges you face, the questions you have, the information you need to help build the future that you want. There's no pressure to become a client. Our goal is simple, to give you valuable information that you can use to make smarter financial decisions. You may be skeptical, and we understand why, but we hope that by the time you leave this event, you'll leave one step closer to your retirement goals.
We look forward to helping you plan to retire well.
3 retirement success questions you must be able to answer. First of all, you have to know how much income you need or want in retirement. Now, folks, a lot of people will start with what they're making as they're working, right? Wouldn't it be nice if you could enter into retirement making as much as you were when you were working? That would be ideal, right? And that would be a great place to start. But what if we have to kind of put the pencil to the paper, as they say, and kind of nail that number down a little bit? That would be highly recommended, because if we're going to do an income plan, we have to know what income we're planning for. So the first question we have to ask is, how much income do we want or need? Let's start with that number. The second question we want to ask is, how much income can I count on that's guaranteed? All right, there's only a few sources of what we would call guaranteed income. There's Social Security. It's backed by the U.S. government, so hopefully that's going to be good. You've got pensions. Okay, they're going to be guaranteed by either a government or some company. Now, hopefully it's a company that's got good credit quality that's going to be around for a while, because maybe it won't be guaranteed, right? But these are sources of income that we can hopefully count on. Another one might be an annuity, like a TIAA-CREF or something that's spitting out a guaranteed income. But this is, if we answered the first question, how much income do we want or need, and then we can answer the second question, how much income can I count on to be guaranteed to be consistently coming in, the last question we have to answer is, where am I going to make up the difference? Let's say I want or need this number. I know I can count on this, but what's that? Where's that going to come from? Folks, that's going to have to come from your retirement savings. These are all those accounts that you've been hopefully putting money into to save for retirement. Those IRAs, the 401ks, the 403bs, the 457s. And by the way, all those numbers, all they are is IRS tax codes, okay, showing those sections. So if I know what I want or need, I know what I can count on, and I'm going to try to make up that difference, how do I know how much that difference needs to be? All right. As a general rule, when we're pulling from retirement accounts, we like to use what we call the 4 or 5% rule, meaning that's how much of our savings we can pull and count on for income. Now, it's not brain surgery, because if we can get an account to grow by 4 or 5, 6% while we're pulling out 4 or 5%, then that's going to work all day long. But most important, as you can tell, I'm going to have to be sure that that's a consistent income that I can take. So folks, those 3 questions have to be answered. And then once we answer them, putting that together in a plan that also accounts for inflation is going to be very important. So if you're somebody that wants that kind of planning, want an income plan, want to know if you have enough for retirement, then please give us a call.
Really good information there about the Ladybird deeds. And so that's where I think of, guys, as far as estate planning. And again, we're not estate planning attorneys, but we feel that that's a vital part of your overall retirement plan. And Ladybird deed is a great way with your real estate to handle things, but with your investment accounts, with your insurance policies, that you can name beneficiaries directly, as well as then even with bank accounts, with payable on death, transferable on death. So there's a lot of ways where you can avoid that probate court process just by following the right steps. And so again, it comes back to planning when it comes to your estate. But we're talking about, again, a little bit more, again, coming back to this planning aspect.
Yeah, absolutely. Larry, did a great job of 2 vital things that are often forgot about, I think, in this process of retirement. You go to put in that final date of your retirement. You've worked all these years, but oftentimes people forget, what am I trying to accomplish here? What are my goals in retirement? One of the things that's often we ask the question when you come in, how much do you want to live on in retirement? What's that budget? What is that? And oftentimes people just kind of shrug their shoulders and I don't know. They go back to what maybe they've lived on recently or what their paychecks have been. But there's more involved in that. With our help, we help people get a real budget in place, help them learn what their necessary items are, maybe what some discretionary spending is. What about saving money for those travels and the grandkids and maybe those special things you want to do? It's all the importance to making sure you have a plan, a retirement income plan, and not just relying on, I hope it works. Right?
Yeah. If you're going to have an income plan, you have to know what income you're planning for. I'm actually shocked how many people don't know how much their Social Security is going to be. Now, they used to send that statement out. I think they're doing it now, starting to do it again. So people readily had that number, but now, because they haven't got that statement in a while, They don't know, so it has to be known if you're going to do an income plan. All right, well, I want you to stay tuned because in the next segment, I'm going to talk about qualities you want to look for in a financial advisor. Hopefully qualities they find in us, so stay tuned.
Today's retirement challenges can be mastered. Knowledge is power because you can confidently plan ahead and make educated financial decisions for a successful and comfortable retirement. We are Centennial Wealth Advisory, financial advisors specializing in retirement planning, serving all of northern Michigan with offices in Traverse City, Cadillac, Petoskey, and Gaylord. And we invite you to an informative and exciting live event with a complimentary gourmet dinner. You'll learn highlights of the new Tax Reform Act, how an IRA gets taxed to a surviving spouse, how two similar portfolios can end up with two drastically different results, what a bull market is and how long it can last, and much more. Call 888-608-5825 to register and choose the date and location that works best for you. Tuesday, December 10th at the Evergreen Resort in Cadillac. Wednesday, December 11th at Boone's Long Lake Inn in Traverse City, or Tuesday, December 17th at Big Buck Brewery in Gaylord. The live event starts at 6 p.m. and is free to attend with a complimentary gourmet dinner to follow, but seating is limited and fills quickly. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Don't miss this important live event. Educated financial decisions. Call 888-608-5825.
Qualities to look for in an advisor. What are they? Well, the first one you want to have in that advisor is experience. Folks, this is very important. When I first got involved in financial services, it was in the late 90s, and I'd never experienced a down market before. All of a sudden comes along 9/11, 9/11, it's 2000. I watched the market drop to almost half its value in a 2.5-year period. That was very important for me to have to experience because in all my training, they talk about market volatility, but I had no idea the markets could be that volatile. And so having the experience of having to have a walk through that was very, very important. 2008, the credit crash. Another time, it dropped to almost half its value. This time only in a 15-month period. Very important for me to have to live through that. Now, by that point, I was much more experienced because I'd already experienced a market downturn. So I, knew they could come along. I knew the risk people were taking, and I had them positioned appropriately. So having the right experience is very important. I remember as a young man, the only time I said experience didn't matter was when I didn't have any, right? So very important to have that. The next thing you want to look for in an advisor is, do they really have your best interests in mind? Now, this is a little harder to determine because, if they're trying to sell you something, they're obviously giving you all the positives of what they're trying to sell you. But how do you really know they have your best interests in mind? The best way I think you can tell is know the kind of questions they're asking you. Are they really, really concerned about what you need or want? and you can tell by the questions they ask. If you walk in and all they do is start talking about what they do and how they do it, and this is why we do it, but they never ask you anything about yourself and how you feel about things, what experience maybe you have, maybe some experience that you had where the market dropped to half its value and you said, hey, I don't ever want to see that for me. So you can kind of tell by the way they kind of ask the questions and whether they're really listening. The other thing you want to maybe look for in an advisor is, are they independent or not? Are they just selling one company's products? If they're just selling one company's products, they're probably not going to be independent, meaning they're really trying to just push that one product. But if they're independent, maybe they can sell from a vast array of financial companies with a vast array of financial instruments. More likely, they're going to be more independent, aren't they? Because they're not just selling one company. The other thing you want to look for is communication. Are they regularly calling you, talking to you, or educating you on what's going on in the markets? Very important. Number one complaint we get with people coming in to our office is, they didn't call me, they don't talk to me. So very important that they communicate with you as well. Hopefully these are all good qualities you want to look for in an advisor. Give us a call if you're not getting that. We'll show you what we're doing, how we're doing it, most importantly what you want, so we can help.
Larry, that was a very interesting segment. Oftentimes, folks come in and maybe they've had interviewed other advisors or been talking with other folks or firms, and they got questions. And sometimes, Larry, you say, well, you don't know what you don't know, right? And those questions out there that, it helps kind of think through some of the things that are going to be important to you in a relationship with a financial advisor, because ideally you're with this person for your life, right? I mean, it isn't one of those things you want to change on and off regularly, because, there's pieces that come and go with that. So there's lots of pieces that fall into place and are important to you to find out at the beginning of that relationship to make sure it's somebody that's going to stick with you for the long haul.
Yeah, and Art, there was a couple that I recently met with that they'd been with the same advisor for about 25 years, and they had basically come in saying, well, we'll just hear what you have to say as a second opinion, but we'd really like to just sort of see if what we're doing is okay. And ultimately they shared, here's what we're trying to accomplish, and sort of laid that out. And so I was just listening and trying to take that in, and then we got together a second time and I sort of mapped out for him, okay, here's what I heard you say in the first meeting, and here's the way I might go about structuring that for you. And you sort of saw his eyes light up a little bit, because he's like, that's exactly what I've been trying to communicate with my advisor for years now, but they said they couldn't do that. And so that's where I think one of the things that we take an approach where we're not tied to any company, any individual company, and so it comes back to, what are you trying to accomplish, and let us help you accomplish those goals.
Yeah, that's a great point, John. I mean, most people don't recognize that when they go in to see a financial advisor, the number one complaint we'll hear people say is, I never heard from them. They never communicated hardly with me. If there was any kind of a relationship at all, I had to call them. So that's something we don't want to err on. I want you to stay tuned, because in the next segments we're going to be talking about income bracket optimization, guys. Real important stuff. So stay tuned.
Are you retired or approaching retirement in the next 5 to 10 years? Join the Centennial Wealth Advisory team for an exciting presentation with complimentary gourmet dinner, and learn essential financial strategies for a comfortable retirement. 3 dates and locations to choose from. Call 888-608-5825 to reserve your seats today. There is no cost and no obligation. Call 888-608-5825.
What can Retirement Analyzer do for you? Retirement Analyzer is a software tool that can help you prepare today for your financial future. You've worked hard to save for your retirement, but as you near your retirement, you may have concerns. Have I positioned my retirement savings wisely? Have I saved enough for retirement, and will my savings last throughout my lifetime? What impact could inflation have on my future expenses? What if I suffer a long-term illness? Will I have enough money to cover my medical care expenses and still be able to meet my other financial obligations? Could changes in the income tax rates disrupt my retirement strategy? There's no need to be in the dark as you prepare for your retirement. Retirement Analyzer can help you find answers to all these questions and more. The first step is providing us with information on your financial assets, the type and current value of those assets, as well as your sources of income. Then, we work with you to identify your expected expenses in retirement. This will include a discussion of the lifestyle you envision in retirement, travel, a summer residence, whatever you dream your retirement will be. We'll input the information you provide us into the Retirement Analyzer, and in a very short time, we'll have reports that show us the percentage of assets currently in high-risk vehicles, as well as the percent in lower-risk products. Retirement Analyzer enables us to project your income from year to year in your retirement and see how long your retirement savings may last. As we change the conditions of the report, delaying your retirement date, including costs for long-term care, adjusting the expected tax rate, or adjusting your retirement strategies, we can see how changes in these variables may impact your income in retirement and the longevity of your retirement savings. Let the Retirement Analyzer help you test drive your retirement strategy today, because the time to discover the bumps in the road is not once your trip through retirement has begun. Contact our office today to schedule an appointment for your Retirement Analyzer review.
Tax bracket optimization. What is it? Listen, all it is optimizing tax brackets. All right. There's several brackets of taxable income that you need to understand and know where you're at in. For example, we used to have what we called the 15% tax bracket, okay? Now, under the new Tax Reform Act, that's actually 12%, 3 percentage points less. The next tax bracket used to be what we called the 25% bracket, but now that is only 22% under the new Tax Reform Act. Okay? Now, the lower bracket, now 12%, that's going to be all your gross income up to about $100,000, you know, give or take. I'm just going to round off for sake of illustration. The next bracket, it's gross income of about $190,000. Now, a lot of people don't understand this, but they think that if they fall in this higher bracket, that all their income gets taxed at that rate, and that is not the case. The first $100,000 that you make is going to get taxed at this rate, 12%, and then the next, any money above that only gets taxed at the 22%, not all of the income. So let's say I'm that person that has pension income, okay, and maybe I have Social Security, and so now between my pension and Social Security, my taxable income is, let's say that's about $70,000 total. I've got $30,000 here available to basically do what? Well, either accelerate and take income because I'm in the lower bracket, right? Or maybe I have an opportunity to do what's called a Roth conversion. Maybe I can take $30,000 each year while I'm in that lower bracket and buy Uncle Sam out at the low rate. Why would I not do that? Now, a lot of people don't recognize with the Tax Reform Act that in about 7 years, this is all going to revert back to the old rates. So I have a huge opportunity right now. If I'm somebody that's always going to be in that 15% bracket or in the 25% bracket, I've got an opportunity to buy Uncle Sam out at 3 cents on the dollar less now over the next 7 years. So here's an opportunity, but this goes just as well. Let's say I'm that person that has pension and Social Security income, maybe other income that's putting me right here. And that's always going to be the case. And then I have my IRA money. Well, if I know I'm always going to be in this bracket, now I have another opportunity right here to buy out Uncle Sam at that rate. So understanding where you're at in the tax brackets and the opportunities thereof, very important in tax planning. So I encourage you, if you're somebody that doesn't understand this, want to see if maybe you're a Roth conversion candidate or the like, then give us a call. You've never been to a seminar like this before. This event is all about you, the challenges you face, the questions you have, the information you need to help build the future that you want. There's no pressure to become a client. Our goal is simple, to give you valuable information that you can use to make smarter financial decisions. You may be skeptical, and we understand why, but we hope that by the time you leave this event, you'll leave one step closer to your retirement goals.
Well, tax bracket optimization, I think, is something that a lot of times people aren't really thinking of. They aren't really aware of what their tax implications are, and maybe they've talked to their accountant about taxes, but it's usually just come tax time in preparation. And so was recently working through a case with a couple where he was getting close to retirement next year, and so we were talking about potentially doing a Roth conversion and ultimately optimizing their tax bracket. But as we dove into that a little bit further, then we understood, okay, they want to keep their income as low as possible for healthcare reasons, for insurance purposes, to keep those subsidies to a maximum. And so instead of going the route of potentially doing a Roth conversion, we looked at distributing that money, sort of building up their checking savings to use that as a supplement to income. So there's a lot of different things to be considering when it comes to tax bracket optimization.
Yeah, no, you're right, John. I think oftentimes people just kind of forget about that, and when they need money, they go take it. They don't think about the consequences or the potential future planning aspects of maybe when's appropriate to do that. I just sat down with a couple recently, and they have had some really great gains in their portfolio over the last few years. This was non-qualified money, not IRAs, so there was a lot of long-term capital gains had been built up in there. They had some positions, guys, that were up over a couple 100%, wow, since they've owned this. So they've done really well. They had some concerns about the market. They wanted, hey, and so, but they were really concerned about selling all that because there would be some substantial taxes in that. We had worked out a plan because of the tax bracket they in, there was some favorable tax treatment to long-term capital gains. And so using that income tax optimization, they were able to realize a substantial chunk of gains and pay very little federal income tax. And that made them excited. They not only, accomplished, kind of making their portfolio more conservative, they also were able to pay little tax, and it made them feel very good about that choice.
Yeah, all the more reason that in our planning, tax planning is very important. You've got your estate planning. We've talked about that earlier with the Lady Bird deeds. You got the tax planning, very important. Income planning. How much income do I need? How much can I count on that's guaranteed? How am I going to make up the difference? Planning is very, very important. I had my own tax and accounting practice for over 25 years. My job was always to try to keep people's taxes lower. Never thought that I might want to accelerate income to pay tax to buy out Uncle Sam. So very different concept. Folks, I just want to thank you for joining us today. Hope you got some valuable information. See you next week.